Hello, this is John Crossman
Ryan Singer.
and we're here to do another installment of the Big, Small, and Weird podcast, where we look at private companies in the venture capital space, and obviously looking at big, small, and weird ones to see what's going on, talk about some of the ideas that's happening to give everyone an idea of where they're going. We have to do a little bit of disclosure. Although Vex Capital is an exempt reporting advisor, we are related to Vex Securities and Vex Registry, which are regulated industries. So we'll take a moment to look at the disclaimer. And you can pause it here if you want to read it more carefully. I will attach a copy of it in the description. So with that out of the way, let's dive right into it. Our three companies today, the big one is Groq. Our small one is NanoCo, also known as NanoClaw. And our slightly weird one is Overwolf. So let's start with the big guy, Groq. And this is an interesting one. Its last price was $6.9 billion. It's just done a big raise. And what's interesting about it is this is a company that looked like it had been aqua-hired out. It looked like Nvidia had paid $20 billion to take these guys out, and now they're coming back and raising money in the market. What's going on here?
Yeah, so it's really interesting, right? I didn't expect to hear about these guys ever again, because Nvidia paid them $20 billion for perpetual non-exclusive license, and the founder, the president, and most of the engineering team joining Nvidia as employees. So the reason it's back on our radar, which is very strange, is they just raised $650 million in a new venture valuation, a new venture round, and it seems like the purpose of it was to restaff after the Nvidia deal. So the company is back, they're hiring more, they have new leadership, and it's just a very strange question. Like, who runs the company, and what do they do? And do they compete with Nvidia, their largest source of funding to date?
Yeah, so maybe go through a little bit of what Groq was doing. What do they really offer? I don't know what they offer.
Yeah, so Groq built machines for training large language models.
Okay, and so they own the hardware.
Yeah, so they sell the hardware.
They sell the hardware. Yeah.
Yeah. So in this way, they were a more specialized competitor to Nvidia.
And they're sort of downstream from Nvidia because they're obviously using Nvidia chips.
Yeah.
I don't know. This one looks confusing. There's some interesting investors in it. There's obviously some Saudis in here. There's a lot of interesting people coming into this, but I'm not sure that this is viable. I'm not sure what the heck's going on.
Well, so it's interesting, right? So 3 months before the Nvidia deal, the company was priced at $7 billion, give or take. And Nvidia paid 3 times that just to acqui-hire away the founder, Jonathan Ross, the president, and most of the engineering team, and to get a license to all of the tech. And so you would think that this $20 billion was meant to take out a $7 billion firm. So, I can see why they wanted the kind of legal fiction that they were operating independently, so they wouldn't need merger review, because Nvidia is a big company, a public company.
And Senator Warren and Senator Blumenthal have sent letters to that effect.
Yeah.
But, are you ducking that?
But then why raise another round instead of distributing the cash to the shareholders?
That does seem weird. Okay. Right? Yeah. Well, this is a big one and a weird one, I suppose. I guess we'll just have to watch it. It's a huge company. They're obviously doing interesting stuff in the AI space in terms of the hardware and basically getting you set up with all the equipment you need. But I don't think we can actually come to any sort of conclusion at this point.
Well, I think my last question about Groq is, if the Nvidia money is coming, right? Nvidia already gave them $3 billion, and they have to pay them $17 billion more by the end of the year.
Right.
Then why would you raise more money from investors?
Right.
Right? Like, what's the purpose of raising $650 million when you've got billions of cash on hand and tens of billions coming?
And this is a recap of some sort, or?
Maybe. Remember that technically what Nvidia gave the money for was actually a license,
right,
and not an investment.
Right.
So that counts as revenue. So the cap table is probably pretty weird at this point.
And they probably still keep all their IP and all their abilities.
Yeah.
Okay. You're right. With 17 billion on the way, why do you need to raise more money? That's a lot of money.
Yeah.
I don't.
So
anyway.
Yeah, the whole thing is just kind of really interesting and strange. I would love it if we could get like someone who still works there to be a guest on this at some point.
Yeah, that would be interesting.
That'd be pretty cool.
Because there's obviously some strategy that's not clear to the market.
Yeah.
Someone's trying to pull something, and we just don't know what that is. Okay, well, let's move on to the small one. We're looking with NanoCo, also known as NanoClaw. And what this is it's some product developers in Tel Aviv, and they built some open source code. It's a wrapper around the Anthropic's Agent SDK. And they've turned down a $20 million acquisition offer very shortly in, and they priced a $12 million seed round at 3 times premium to the median AI seed in May 2026. So
they raised $12 million at a $62 million post,
right,
which for a seed round is incredible. Like I was here for the crypto mania, and most companies didn't get that kind of seed at the height of the crypto mania.
Yeah, probably the number's like a third of that.
Yeah.
Yeah. Okay. Well, so it's sort of interesting. I mean, what do you think of the claw companies? Do you think there's something to this putting a wrapper around the Anthropic, basically core and offering this? Is this a real thing, or is this just sort of a bit of a rug pull?
Yeah, I mean, it just isn't that hard using Claude Code to spin up your own Docker instance,
right,
and spin up a agent management harness inside it. And I'm not sure I get what's worth $62 million here, given that OpenClaw, which is the leader in the space,
right,
is open source,
right,
and subsidized by OpenAI, which is literally the leading frontier lab.
right.
Or arguably maybe Anthropic is, but they're at least
anyway,
number 1 or 2.
The chief competitor to Anthropic, right?
Absolutely, yeah. Right? And so, in addition to that, NanoClaw seems to only work with Anthropic's API, and Anthropic keeps like banning these kinds of third-party harnesses and then re-enabling them and then changing its pricing model for them and all. Like it seems like there's a lot of risk and tension around their normal product.
Right. So these guys have one big strategic risk to them, is that if Anthropic doesn't feel comfortable with them, it could all be over pretty quickly.
It could. Honestly, I could see how the idea is that their valuation was intended to be a premium to the acquisition offer.
Mm-hmm.
But when your primary competition is open source, supported by a multi-billion-dollar company, it gets a little hard to I think see the upside for investors. I don't know. Maybe I'm wrong.
Yeah, well, it's a fun one. It's a small one, so it's probably easy to watch.
Yeah. So one interesting thing about them, as we talk about the kind of API banning idea at Anthropic,
mm-hmm.
is this isn't the first time we've seen this stuff in the tech world.
Okay.
Right. Microsoft with early versions of Windows had a pattern of encouraging the software industry to ship products on top of Windows, and then as soon as one got popular, Microsoft would buy the number 2 in the space, package it with Microsoft Office, and kill the entire category.
Kill the category.
Right? And that's
I believe that was the source of Google's Do No Evil originally, right?
Absolutely.
One of the sources,
yeah.
Yeah.
Likewise,
which got dropped.
In 2023, both Twitter and Anthropic, both Twitter and Reddit killed their APIs,
mm-hmm.
killing entire industries
Right.
of startups relying on their API for presenting that content in different ways, for presenting better search, for managing advertisements, all of those things.
Right.
And so I think that there's a real challenge when you're building on top of somebody else's platform and they're shipping competitive features.
Right.
That they could just basically give you a 90-day notice to tell you you're dead.
Yeah. So, it could be, well, they've raised the money. Maybe that's what they were trying to do, is just get some money out of it and move on.
Yeah, maybe. I think if I were them, I'd probably be looking for an Anthropic hire, Anthropic acquisition, right? Just like when OpenAI took OpenClaw in. I think that's really the good outcome here, is they get to become Anthropic's OpenClaw.
Okay, so they try and just write features that are attractive enough to Anthropic to entice them to take them over.
I mean, alternatively, they become Docker's AI strategy.
Okay.
Which could also be interesting. Okay. Let's look at the weird one.
Let's look at the weird one. So our weird one today is Overwolf. They've raised a total of $149 million. Their last price round was in November of 2021, so it's been a little while, but it is kind of an interesting platform. It's an Israeli platform. It's built an app store on top of other companies' games. And it's paid out about $300 million to the mod creators in 2025. And it's not raised a price round for a while, but the gaming sector, since the gaming sector really peaked about 4.5 years ago. But it is an interesting one to look at. They have, I think what's really interesting about them is some of the stuff that's come up around AI. Maybe we should start in there, because there has been a little bit of a controversy on that one.
Well, so an interesting thing about Overwolf is, unlike most other kind of gaming app stores, they don't own the platform where people are playing the games.
Right.
And they distribute not just the games themselves, but also mods to the games.
Mods to the games, yeah.
Right. So this is kind of cool, right? So they compete with Steam,
right?
Which is also a third-party platform. But Steam, one, produces a lot of their own games.
Yes.
And two, has some hardware that they sell to be able to play independently of a computer or a platform or a console.
Right.
But Steam doesn't do a lot with the mods. Mod sales are usually off-platform for Steam. Whereas Overwolf, this is their main monetization, is being an app store not just for the games but for the mods themselves.
And the mods are popular.
Yeah, absolutely.
And the mods, I mean, I know a couple of people that are really quite into it. They're even playing mods off of Command and Conquer after all these years.
So you mentioned the AI slop thing. Yeah. This seems to be where the users are getting really upset. Okay. So CurseForge users have been begging for an AI content moderation policy. And instead of doing that, instead of kind of helping the users be able to figure out which mods have a lot of AI content and which mods have a lot of custom-written, human-written content,
right,
and human-designed content, they instead shipped an AI mod pack creator to mod developers. So instead of saying, listen, we're going to cordon off the AI stuff and protect users from it,
right, they
instead say, hey, guys, you want to build mods with AI? We're going to make it easier for you. Come here. We want you.
I mean, is the AI all slop, or can there actually be some good stuff built with AI? Or,
well,
and we've certainly seen videos have improved a bit with the AI. I mean, it was slop on the Instagram, the YouTube, and everything like that. But there has been some improvement lately.
So I searched X to see what people were talking about, and I found this tweet by Makina Kid, where he says, CurseForge really just fell into the gutter of AI. Literally every other mod is an AI icon with the ugliest art style.
Okay, so the people are not doing their best work here.
Yeah. So yeah, I mean, it's interesting, right? Because all of the ad revenue is paid 30% to the company, 70% to the mod users.
Right.
But it's split up by usage. So if if some users are producing AI mods at scale and they're getting installed and not really uninstalled, the real developers that are building mods that are popular and good, that actually get used and not just installed and then forgotten about, are getting smaller and smaller and smaller slices of the pie, even though they're creating still almost all of the value.
All the value for the company, yeah.
Or at least for the users.
Or for the users, yeah. Interesting. Okay, well, I guess we'll have to watch. I mean, there is a risk, I think, since the last round was in November 2021, that maybe the next round will be a down round. So there might be some trouble in paradise here. It's unclear how much money they're actually, whether they're able to fund themselves with their ad revenue and with their gaming revenue.
Well, it's tough in gaming right now, right? Like they raised $75 million back in 2021, but that's when A16Z and Sequoia really loved gaming companies.
Yeah.
These days, gaming is just at much lower valuations and there's much lower deal volume. I'm not sure that they're ever going to pass that high watermark, even if they can say, our ad network is doing well.
Right. Okay. Well, it's one to watch. Then maybe there's a opportunity here if they come out with a down round or something like that where you can pick something up cheap, but it does look a little risky. Okay, well, there's our big and our small and our weird. As always, if we've said anything which is misleading or wrong, please let us know. The purpose of this is to get discussion going and to find opportunities in the venture space, a space that is notoriously opaque. So we're trying to sort of bring out some of the issues and talk about some of the issues that you may not find in the usual spaces. So thank you very much for listening, and we'll talk to you later.